Thanks very much for joining. Today we have Christian Nagel from Earlybird Venture joining us. Thanks for joining, Christian, to the Protos webinar.
Thank you. Thanks for having me here. How shall we start? Shall I give you a very brief overview of, or introduce myself and give a brief overview of Earlybird?
Absolutely, that would be great. Yeah.
Okay, no, happy to do so. So we're doing venture capital since it's quite some time. From my background, I'm an engineer. I was a couple of years with McKinsey after finishing studies. I then basically bought companies from the East European, East German government, so to say. So when the war came down, so I bought companies in Germany and basically restructured them and did all kinds of things. So that was a very interesting time, and then it was end of the 90s, so a long time ago, and then venture capital came, Mark came, so. And that's how we got to venture, kind of interesting. At that point in time, there was hardly any venture capital in Germany, so we were really among the first ones. A year later, Germany had, I think, more than 100 venture funds.
When was that?
It was 2000. 2000, we had 100 something venture funds in Germany. Out of this group, I think less than a handful is left, so to say. That's interesting.
From that, I guess, but there were probably started more after, right? It's probably like the crypto fund cycle in 2017. I think everybody and his dog opened a crypto fund, and us as well. So, but anyway, you're still standing. So
and since then we are in the market. Obviously, we have now the third big crisis kind of thing. So we had the 2000 crisis, then the real estate crisis, and obviously now we are in a different situation again. That's really interesting. So having lived through three times now different kind of these things.
Yeah.
But we are today the largest German-based venture fund. Not just investing in Germany, we're investing across Europe with three strategies. We have two basically focusing on tech, divided a little bit geographically, east and west, with teams on the ground in East Europe and in Western Europe. And we have a third strategy, which is focused on health. No pharma, no drug development, but e-health and digital health and services plus. So those are the three strategies we have in the market. Currently investing out of 450 million out of this generation, so to say. And in the tech part, we focus very much. We have three main focus areas, which is fintech insurance tech. It's mobility and sustainability, and it's enterprise productivity. And our view is a little bit in the world. We always say we don't invest in technologies. So we would never say we invest in AI. We would never say we invest in blockchain, because. But if you look into the companies we invested to, most of them are using somehow AI. Many of them are using kind of protocols, crypto protocols, blockchain. But we always look for the application and look for the business case. And this is our main focus. That's why we don't say we invest in these technologies. We rather invest in certain sectors where we have hypothesis, so in terms of which sectors are being disrupted, or which kind of companies will be disrupted or need to be disrupted. Like for instance, the banks. We really don't like banks, so this we like to disrupt the banking sector. Because it's in many cases it's bank robbery. Can tell you a recent story from again now how much money they want to have from us, the banks, when converting US dollars into euros. It's just bank robbery.
Crazy.
It's still the case. It's still happening every day, basically. And you wait for your money. The banks tell you, we sent the money, but the money is not there. So that's why we really. So this is a big sector for us, and same with the other sectors. And as I said, we are tech investors. We're really looking for deep tech things. So we always want tech routing in companies. Now you can ask them, well, what is N26? Where is it in routing? But they have developed their own core banking system, not entirely. They have basically taken one, but adapted this. And so there's lots of technology in there to make it happen. So we always look for this technological foundation in companies, and that can be so to say. There can also, in many cases, it's AI is involved, and in other cases, it's blockchain technologies or blockchain involved.
Cool.
So that's a little bit about us,
yeah. No, that's the starting point, right? And then obviously, we are here very interested in blockchain and cryptocurrencies. Of course, you're coming more from the venture side. than trading crypto. But of course, we're very interested in how you made those blockchain investments, right? And how you found them. So I'm wondering, I know at least about 3 investments that you have made so far. One was Shapeshift, the other one was Bitwala, and Dennis Diver is here as well. So he'll have some more questions, I guess. And can you hear me, Christian, or is it?
I can hear you. Yeah, I can hear you.
And then you made another tokenization platform investment. So I mean, so when was the first time actually you thought about blockchain, and when did you get started with this space?
Well, the first investment in this space, we have been obviously discussing this for quite some time, but the first investment we really did is Shapeshift, so a crypto trading platform. And there was a time basically where we were not very much regulated, and once we invested, the regulation really started to kick in, and it was the idea. First, the idea was basically to always find a jurisdiction where you can do whatever you want to do. Yeah. But then we realized, okay, well, that's probably not the right thing to do, because then you kind of jurisdiction hopping, and this is not a sustainable business model, which can become very valuable. So yeah. That's why we started also then to comply and started to basically comply with regulation, which took some time and is cumbersome and is losing also a lot of what the original idea was.
You mean Shapeshift as a business?
Yes, yeah, Shapeshift as a business. So, but to your question, that was the first company we invested into, and then
that was 17, or when was that?
Yeah, that was 17. Yeah.
And I mean, that must have been like really, like still at the very early beginning of, let's say, this hype, right, of 17. So, I mean, you must have looked at it already in 16. So I'm just wondering, like, when was the first time that somebody pitched to you like blockchain and crypto trading, and what did you think about it?
Yeah, I think it was a couple of years before, not too much, but a couple of years before. And since, but at that point in time, it was where the ICOs came up, and it was about investing into tokens, and this is something where the normal VCs fund weren't made for. So you basically had to, or still have to, seek basically approval from your limited partners, whether you are allowed to do so or not. And and we started then also preparing for that. Then we realized, I think about a year or 1.5 years ago, that there's no need to do so, because most of the companies, the ICO market is not happening to that extent anymore. Other than rip-off stories or not really solid business models. Not across the board, but it very, very widely. And many of the companies who approached us for investing into tokens came to us and say, well, are you interested in doing equity investments? So it's and then it comes to a combination of both. So this is something we've seen. And so that's why we will prepare our new fund basically for being able to invest in tokens, but it's not that needed anymore than it has been maybe 1.5 years ago or 2 years ago.
Yeah, I mean, back then, of course, I mean, I saw some number that there were like 100,000 ICOs, and guess how many out of those actually developed a product? And the number is something like 250 or something like that. Actually build a product, push it out, and that is actually working today. And so it's like a very, very small amount. I think that everybody has understood that. On the other hand, obviously the ICOs, that was a great way to kind of crowdfund your project. And then, of course, in this hype cycle, it took over a bit, which obviously was very interesting. So, and then, obviously you came into Shapeshift, you looked at infrastructure, I guess, right? And you kind of combined that with an investment in Bitwala. Bitwala was more regulated, I guess, but it was later, or wasn't it?
No, Bitwala was basically, it is, they are completely regulated roof, basically. They're using a bank as a partner here, so it's completely regulated. And most of the businesses we see today, they have to.
I think, right?
Yeah. So there's no way to basically to do this without, at least if you want to market in your Western jurisdiction, or basically in normal jurisdictions where you want to. Well, for us, it's also about a business model. It's about the next round of financing and so on, and then exiting the company. So you can only do this if you're legit and do this in countries where we also have the buyers to provide this. Yeah.
And I mean, but Bitwala was when did you go into Bitwala? Was it the same year of 17 or later?
No, it was 18. Yeah, it was 18. Yeah.
Okay, so really, you kind of kept going into this space. I mean, is that so? I mean, you must have looked at various investments, right, at that time. And like, why did you kind of settle on, you know, Shapeshift, Bitwala, and then maybe just to round this up? So basically, you have made a third investment.
It's called Crossland. They basically what they do is they find a way they use they tokenize loan portfolios. So it's securitization basically. So you have to securitize them basically to be able to market them. And this is something basically which basically, if you look back, that basically induced the real estate crisis back then in 2008-9, because you were not able to look into these portfolios. So it was basically, you just got a rating stamp from a rating agency, and then you bought based on this rating. But you never could look into these portfolios anymore. And this needs to be changed. And with their approach, Crossland's approach, basically tokenized approach, basically you can look into this. You can look into basically every loan, to every detail of the loan, and you can very easily slice and dice these portfolios also very easily and simply. So it's cheaper, it's more transparent, and it's faster. So this is what they achieve with the technology. And this is a good example of what we like. So in terms of what we're looking for in terms of businesses, which can be applied fairly quickly. That's why in the end we also did not invest in kind of protocol or layer investments, which are obviously or could have a much higher potential, but obviously takes very long and until you get to something, and especially now where you are not be able basically with an ICO to raise hundreds of millions easily without a product and then can build this. It's very hard basically to make a good business case out of this. That's why we stayed away a little bit from those, knowing that we still look at this, but knowing that it just takes very long time to build a business model somehow out of this.
Yeah, absolutely, right. So I mean, and Crossland, I'm just looking at the website. So basically, but they're operating security tokens, I assume. And then are they operating through a broker, or how do they distribute the tokens?
Well, it's not so much they don't have their own token. Well, they may have come with their own token. It's more that exactly it's basically it's the asset, so to say. The asset is a loan portfolio, like 1,000 loans from SME companies, for instance, which are being traded every day. Banks, because they want to reduce their balance sheet, other want to increase their balance sheet, other want different maturity. So this is a kind of business which is happening every day, but with a kind of cumbersome process. So the securitization process is kind of cumbersome, and this can be radically in many dimensions optimized with regard to cost. You need to take transparency, as mentioned. And speed also, and so they tokenize basically, so that they bring these assets into the chain, and then you'll be able to trade, slice, dice, and do whatever you want. Yeah. I mean, that's obviously a super interesting field, right? And as you know, we've attempted that with a security token as well in Protos that tokenized a hedge fund, but obviously the major problem, of course, is liquidity, right? So, I mean, in traditional financial markets, when it's brokered through these, let's say, these old rails that you and me want to break, right? It's very liquid, these loans, but then the new rails are not really there yet, right? So for these new security tokens, there aren't really security token exchanges, and we've had a couple of projects. So where do you think this is going, right? I mean, so do you think we'll see, how long will it take to kind of have similar kind of liquidity in, let's say, Crossland products or even inter-exchange products that are securitized? Yeah. Well, the interesting thing with Crossland is basically it can exchange or can basically be adapted right away without to change the process, but you can do the same things you have been doing before. And you even get a better analytics because you can look deeper. You can run your benchmarking analysis on those loan portfolios in the same way you're used to this. So it's not that and this is a good thing. So you don't need to talk about basically a lot about it's blockchain based, it's tokenized. So it's not you don't need to talk about this.
It's basically just the accounting. Yeah.
Exactly. You just tell them what the benefits are by using this system or this method, and people are happy with this. So that's a big difference from basically introducing tokens, where indeed, like you mentioned, in Protos have the issue of liquidity, and I think this stays. So this is something which is obviously a thing which is which is hard to overcome. So you just have to create some liquidity somehow, and this obviously and what we're a little bit back to the old world. Like you can't do an IPO with less than 100 million free float. Maybe it's 200 now, so it has come up. So it's kind of the same thinking. Obviously, below this certain threshold, you just don't have the liquidity.
Trading.
You don't have the investors. And you don't get the attention basically. And this also basically it's hard to get the attention because you can't market yourself obviously with a little general small volume.
And the cross-sell investment you made in 2019 then, because that would make sense, 17, 18, 19, or?
No, I think we also did this in 18. That was also an 18 investment.
Okay, cool. Okay, cool. So this is basically, these have been your blockchain and crypto related investments. And like, where do you think, crypto or blockchain,
well, we have a third one, which is Xane.
Okay.
Xane. And they use basically what they use. Well, they have actually pivoted a couple of times, and their base is. Sorry, I need to just switch out Siri because Siri is always kicking in here somehow to talk to me. What they do is they do federated machine learning. So they allow basically training of your AI models on the premise or on the device, whatever you have, and the idea is behind this is, and for this they use blockchain, and what they use for the exchange of information, for security exchange of information. And what is this for? It's basically for training your models without sharing the data. So with that technology, you can, which is obviously GDPR relevant, or CPPA in California, in the US, basically it's also quite relevant now, the data security. And with that technology, you can, as said, you can exchange data without exchanging data. You just exchange, so to say, your learnings from a certain specific data set with the others. So it's not the data being exchanged, which is extremely interesting, obviously, and this is a clear trend we see. And so they even combining those two buzzwords, if you want to say so.
Cool. Yeah, I mean, data training and AI obviously is a big topic anywhere. So and Xane, how do you spell that actually?
Xain.
Cool. Cool. So this was basically your past investments, and then maybe just to wrap this whole story up is basically what do you think? What do you think are the interesting topics right now or going forward that either you're going to invest in, or that you still think interesting, but maybe you don't invest in because for whatever reasons?
Yeah.
In crypto and blockchain.
Yeah. Well, we stick a little bit to the hypothesis or our thinking around it has to be an application which can go to market or is not too far away from going to market. Is really is basically adapted, and so that's still our thinking, and we believe and combined with still big markets, so big potentials to become basically to grow into a unicorn status. So this is something we are looking for. And obviously you can say, well, if you, as mentioned, you can go on protocol layer and you become very broad, and then obviously it can become very big. But then you have the question of how quickly get this is this adopted, and how do you get all the players hooked onto one platform. So that's a big issue we have here. So that's why we're looking more into the more application, like in the cases I mentioned. And we see now applications in the back end of banking, so more on the B2B banking. We see a lot of opportunities, a little bit like the cross-sell thing, and basically disrupting more processes of the banks. For instance, the custodial function. I mean, obviously for the cryptocurrencies, there are lots of custodial startups out there. But the even much bigger market is, so to say, the real world custodial function, because obviously you have this kind of, in German, the depot, Yeah. So you need this for all kinds of securities, for shares, for certificates, whatever you need.
Yeah, and it's super inefficient, right? Yeah,
it is super inefficient. It's costly, so you can, for instance, what you cannot do today, basically you can't buy efficiently for 100 euro or even 1,000 euro a piece of real estate. It's basically impossible because it costs too much basically to run the process and then give you and then have this kind of really deposit this somewhere in a secure custody. So it's hard.
But you mean like you want to slice and dice like a real estate, an apartment, and then say, I own like 100 of this apartment, and like a crowdfunding for real estate, which is
just one example of what you could do basically, always of how this is opening new markets. It's already a big market, opening new markets, really nailing something which is not possible. So this is just an example of where we see disruption potential, and this is combining a little bit. So the two things you have a problem today, or there is a business today, and which can be disrupted, and there is a margin, there is a market which is there, can be heavily disrupted by the technology. This is a good example of what we see, and this we see in many other processes of banks.
Mm-hmm. I mean, one topic that we are, and we just touched upon it before, that we are super interested in, and I think also the group here, is decentralized finance, right? So this obviously is completely new rails, and I think a year ago it sounded really like science fiction, also like to me. But I think now we're seeing billion-dollar volumes in lending, in trading, which is completely on-chain. We're seeing ETF-type products that are happening. So what do you think about the DeFi space, which is obviously kind of the hot topic this year, right? It's in at least the crypto and blockchain space.
I totally agree. We also see this as a very hot topic, and you mentioned this because I would have mentioned this next. Still, in here also we try to combine basically. We would like to invest in something which can be which is ready for the masses, so to say, and not stay with kind of the geek community. Which is obviously it comes from which is good.
Yeah.
It is out now, but we like to so that everybody can use it, so everybody gets the benefit, and
it's really just now, right?
Yeah. And we have Dennis from Bitwala here, and this is exactly what we're doing with Bitwala. Basically, that's the exact idea of Bitwala, giving everyone easy access to those kind of products, with the idea of in the banking world now, as I mentioned, banking, they rip you off basically. Now it's even so that if you deposit your money there, you have to pay for it.
Exactly.
So and this needs to be changed. And exactly, DeFi is a perfect way of changing this and turning this to the opposite in terms of making this deposit of money, in terms of having money somewhere and the money is working and earning something for me. Make exactly this reality again, which has gone over time, and we know the reasons, but that's a good way also basically to attract many people. And this is what we're looking for. So try to find something in this space. I totally believe this, and this goes further. This goes basically beyond also the point in terms of all the assets will become tokenized. And we have this also the goal. Everything basically all the real assets will also become tokenized. Plus then the different kind of DeFi products, and so we're looking basically for lending and we look also for something which can be applied for kind of the normal business, like for instance for SME loans or something like this. So just to make them to open also the market, because for SME it's hard to get loans from banks because they don't have the processes and just too costly for them. So for them really it will be a very good approach basically to open up this market and make this work.
Yeah, I mean, one of the mechanisms in DeFi is of course that these lending platforms always over collateralize, right? And that's a concept which I really like because it basically means, well, I mean, if this collateralization drops below a certain threshold, then there is an option which is going to sell off the asset, right? So, but I'm always sure that I will get my loan back, right? And on the other hand, somebody that has right now, of course, the big collaterals are Bitcoin, Ether. But of course, you could now start having, for example, Protos tokens, right? The Protos tokens is security. It's running on the Ether blockchain, and it's a security. So behind that token, that you could have a company, right? And you could say, oh yeah, like this company is traded, or the Protos token is traded at $1, and there's whatever worth that is, right? So it's $1, and I can borrow against this $1. I can, let's say, borrow 50 cents, right? If I pledge this token. So where do you think that is going, right? So let's say we have a combination of security tokens, then you have the DeFi lending platforms, and then we have exactly what you want, right? A SME that Protos is not an SME, but there could be security tokens, replicating that. Where do you think that is going?
Mm-hmm. Yeah, I think it will be. I see basically. I see this become the norm kind of thing. So this is really my belief that because as said, it's much more efficient. It can be more secure and faster. So I think this will become at least for specific segments, as I mentioned, like SME segment, which is hard to tackle for the banks. And obviously we have platforms now being this, but I think they may move to exactly like DeFi products more than it can conform.
Yeah, the big advantage, right, in DeFi that I see is that once it's built, it's just living on the Ether blockchain. And I'm just going to pull up a chart here on the growth of this whole space here. I don't know if you've seen this. I'm just going to show this here. So I think this is quite interesting what's happening here, and maybe you have some insights. What's going to happen next. So basically, right? We can look at the different assets that are locked. So Ether locked, DAI locked, and EOS locked, and and this went to 1.8 billion now. So that's quite a big amount. And what I think, so there were a couple of course iterations to this, right? So this is why this only started really 2018, right? Before that was nothing. And then there was Maker, obviously, and we have Freddie here, who's pretty active in that. And then we had maybe EOS Rex was super popular. I don't know. Are you looking at these kind of measures? Because now we're already looking at 2 billion, and I think this really has a potential of kind of an exponential growth, right? Once people figure out, wow, I can borrow money, for very, very low interest rates, right? So some of these interest rates are 2-3% per year. So much better than your credit card, your bank. And if you're in, let's say, a developing country, right, then this could be even, you could not even lend money. So, yeah, any insights on this? Where do you think this is going, or do you believe in any of those platforms here that are on it?
Well, I think there's one fear I have, and this will become a reality. I think this will also become regulated. So that's what I.
Okay, but how would that happen? Because I think so too, right? And I'm really worried about, for example, set protocols and of these Uniswap exchanges. It's all unregulated right now, and they're all saying basically, oh yeah, it's just software, right? So we're not charging any fees, and that's therefore everybody's free to choose to use it, and it's not regulated. But I think that's what do you think? Where do you think regulation is going to go?
Yeah, I think if this continues and obviously also businesses, it goes really broad, then it will become regulated, because lending is regulated in the end, and you have to have licenses for it, which is obviously something the community doesn't like too much, and we all have hope that this is not going to happen, but I think it's going to happen here. But still, I see this becoming the norm. I'm 100% sure. This will become the norm. So but it will become regulated. I'm very sure about that. So I think
unfortunately,
probably not hasn't surfaced so far really.
It's interesting, right? Some of them should have been regulated probably a long time ago. I think Freddie, you have to leave in soon, and so just want to briefly open it up if you have any more questions for Christian.
Yeah, it's an interesting one. I guess the question would be mostly on how do you regulate something like this? How do you even approach it?
Yeah, well, you have to. A good point. You have to obviously all the ones lending have to be somehow regulated in the end. The question is now, if everybody can be, so this is the beauty of it, that everybody can do that. That's obviously something you have to do. Then probably it's via some platforms, so you have to which are regulated. So I think that the regulators will be kind of like in peer-to-peer. You have basically, obviously, if you want to invest into something, then you can do this. But the platforms are being regulated then, and so this is, I think, also going to happen here.
Yeah, fair enough. I think it will just be interesting how quick it can grow on the basis that it will be very difficult for a coordinated, regulated response globally, because the point of this is it's permissionless, like, kind of has 100% uptime, and effectively it's like pseudo-anonymous, whoever is partaking. So actually you don't know who your lender is. And the fact that it's over-collateralized in nature is supposed to circumvent the risk that you're taking, the credit risk. They're trying to basically remove that as much as possible.
Yeah.
But yeah, I agree with you. It's just, it could be absolutely enormous by the time that happens.
Yeah, it is, and this is exactly the same why it's a superior model. But I fear that it will become regulated here, and to prepare for this happening.
Fun times.
If it becomes bigger. Which can be okay. I mean, we are living with regulated banks and still have fun with them. So it's something we can do. we even, for one of our companies, we even now applying for a carrier license in the insurance space, and it's not that big of an issue. You can do that. You can live with these regulations. It's not all bad. It's
No, of course. No, thanks so much for your time, Christian. I do actually have to hop off, but yeah, it's really, really interesting to hear your thoughts on that.
Yeah, thank you. Thanks for listening.
Yeah. Cool. Yeah. Okay. So let's leave the DeFi topic then. So obviously lots of stuff happening there. And let's see how. I mean, I guess if Freddie is right, then and this goes to 100 billion, right? Then let's see what happens. So we've talked about platforms. We've talked about DeFi. Any other themes that you think are interesting in terms of investing in crypto or blockchain right now, or?
Well, DeFi is really something where we look in depth into this currently. But again, always from the angle of can this be really can this become a business? How can you make a business out of this, and how does the business look like them? And can you disrupt something or create new markets? So this is always something we're looking for. Either you disrupt something which is there and make it efficient, and hopefully it's a big market, or you really open up completely new markets. This is also the beauty of it.
Yeah. Okay. Are there any other questions? I think Dennis already left. Whatever. Any other questions here from the group, by any chance?
Hi, this is Michael. I was wondering, any sentiments concerning public or permission discussion from an investor point of view? Is one interesting than the other, or do you differentiate that?
Sorry, I didn't get this. Permission for
project that build on public blockchains like Ethereum, or then you have more consortia processes that are closed ones. So I was wondering, do you differentiate it, these projects, from an investor point of view? So do you believe more kind of, it has to be public, open source, I think this is going to scale, or are you there indifferent?
Well, we believe clearly more in the public and the more scalable, so to say, kind of the open source approach. This is something we believe on, but it's indeed hard to build business models on top. And we have had this discussion in the past over and over again that how can you build businesses on this? Already have to basically first build the layer, and then the businesses come on top. So that's really something we have been discussing, and but haven't come to a real conclusion in terms of where to focus on. A little bit, we're telling more towards the applications, but obviously, but to the questions, yes, we clearly see this, see the open source and open approach as the right one, which can become big. Obviously, the closed ones you can create businesses, maybe that's true, but they may be limited in terms of scale or size then.
Yeah, and I mean, and obviously the biggest. I mean, I guess you mentioned last time when we met. Of course, your favorite investments right now are M46 and what's this AI automation one?
UiPath.
Exactly, right. So these are like your babies right now. So that's obviously the opposite of it. Cool. So any other questions? Otherwise,
maybe question to you. What do you see and other approaches? And we will probably discuss. So where do you see? Because I was curious to see what else is happening, since we don't have kind of this laser focus on your industry in terms of, because we're more coming from the application side and business side in terms of what is, but looking basically looking into your specifics. What else do you see? Do you see anything else besides what we discussed, DeFi specifically?
You mean me or Michael?
Yeah, the group also.
Okay. I mean, what I think is, I can show you some stuff here. What I think is, I mean, we're of course more. I mean, Protos itself, right, is more on the trading side, right? So we have capital, and that we want to deploy in, let's say, in liquid strategies. And I'll just and I think it's in what's happening right now, and why I'm pretty excited about DeFi is that for the first time, really, we're seeing a kind of usable interfaces, right? So, for example, Zapper, it's Zapper.fi. They put up a website which kind of shows. This is one of our accounts here, and you connect it with the MetaMask wallet. So you have the MetaMask wallet here, account 1, right? And you have some Ethernet, USDT, and so on. And what I think, and they of course integrate from the different platforms now, the different pools that I have here, right? So, and if we compare that to obviously one of the first ones was the MakerDAO dashboard. And this is what it looked like. I don't know if you saw that ever. If you have a look at this? Did you see this? MakerDAO dashboard?
Yeah.
Right. And I mean, that was like bloody unusable, right? I mean, I thought it was really cool because you had, like you saw here, like some very interesting figures, like what's the bust boom spread, right? How much you're getting paid for, like, and that Freddie mentioned, right? Because the loans are over collateralized, then what happens if they drop below the threshold, right? And then there are these auctions that kick in, and then as a participant in the auction, you're getting paid this spread, this 3%. So obviously that was very juicy, right? If you make on a single trade, you make 3%. That's super interesting. But the whole thing was super unusable. You were then able to kind of collect data here on the CDPs. And screen the CDPs that are very close to the threshold. So if there was a small movement in Ether, you were able to kind of kick in immediately and kind of waiting on the sideline to kind of grab this pool, like grab this auction. But now what we see is that you have not only these single platforms apps anymore, so like Uniswap, right, and Ray and Balancer, and then you can you can look into the anyway, so you have different platforms, but again, so these platforms are now operating, and these are very cool apps actually, right? So I mean, each of them is quite usable. So for example, let's go to Uniswap. If it's a very simple platform like Shapeshift, right? I mean, but Shapeshift now, of course, going in the direction of regulation, but Uniswap is not, and anybody can swap whatever they want. So I can swap here Ether against all the other tokens. Let's say I want to buy DAI because I agree with Freddie. DAI is going to go crazy, and the reason is I can show you immediately. So the reason is, let's look at USDT, for example, against DAI. And $1 should be one DAI, and one USDT should also be $1, but you're only getting 0.93 for a dollar. So that is 1/93,217. So we're talking about a 7% premium of DAI. The question is, of course, why, right? And the question is, and the answer, I don't know. Freddie, you're back. So Freddie, you want to answer why DAI is trading at so high and why it's gonna probably explode? I mean, it's a bad sign actually, because there's too little liquidity. But the reason of DAI being so valuable is because it has such a high interest rate on it. right? So
it's actually I can tell you the reason. It's actually a little bit more nuanced on that. And so if you're not familiar with all of the protocols that exist across the DeFi space, then this might be information overload. But one of the biggest strategies of a lot of people out there is something called farming, which I know is quite ironic with my last name, but that's not actually, I didn't actually come up with this. But
you got to do it, Freddie. Got to do it.
Actually, hang on. How do I actually? Oh, I've just gone on. I'm trying to put video on. So in essence, one of the most popular things that's happening at the moment is this kind of farming. And you ask how potentially you weren't set up to invest in some of these tokens. So a lot of these network effects, liquidity aggregators that exist at the protocol level are giving away governance rights to the future of their protocol. And those have their own price and they trade on centralized exchanges. So the Compound protocol, for example, is currently trading at, I think it's like $183 per Compound token, which on a fully diluted base is like a 1.83 billion market cap. So absolutely enormous. And what effectively people are doing on the Compound protocol is they're supplying and borrowing assets in order to optimize the distribution of this Compound token. So yes, the rates for lending DAI are quite high, but actually the rates for lending DAI plus the compound you earn for partaking in the protocol in this early stage is incredibly high. The reason why I think DAI is rocketing right now, as we've just shown, is a governance using the Compound token that's been distributed, a governance vote went through to change how the distribution is. And the new optimum strategy for earning Compound token is to supply DAI to the protocol and then borrow your own DAI. I think this might be a really interesting one to show to everyone, Philip. If you were to go on the Compound protocol main website now and go to the markets page, you'll see what this has actually done. So I don't know if you're able to share that at the same time. Right. So these are the lending borrow markets. So if you go down there, you can see the change in lending and borrowing of DAI has gone up like astronomically.
500%. Yeah, 700%.
Yeah, and what a lot of people won't necessarily realize is the total amount of DAI in existence is less than 200 million.
Yeah.
So this is kind of this is like rehypothecation on steroids. People borrowing their own money in order to mine Compound, because the annualized returns on this strategy is over 100%.
Yeah, but I mean, the problem is but the problem is, of course, there is a threshold, right? And it depends on the Compound price, and it depends on how cheap you can get more DAIs, right? Because you cannot take unlimited leverage, right? Because there are these limits on how much you collateralize.
Yeah, no, absolutely, of course. But the beauty of the distribution model and the reason why DAI is being optimized for is because it has a debt ceiling. Yeah. And the ability for Maker to change that debt ceiling is quite slow. Yeah. So actually, this should persist for a fairly reasonable amount of time at over 100%. I mean, even for example, if comp was to drop by half in price, it would still be 70% annualized returns on effectively a 1 times long DAI position. It's
that's good.
Yeah, it's pretty good.
So where's the ceiling there? So where is it?
The DAI, it'll be on another page, but if you're familiar with MakerDAO, the ceiling is just a function. So the MakerDAO is a decentralized stablecoin, and it's backed by over-collateralized Ethereum-based assets. So you lock up at least 150% of dollars, $150 worth of assets to mint $100 worth of DAI, and now that DAI can be used in this stable way. This is a little bit, there's a bit of a nuance to this. People are obviously mining comp, but it's just fascinating to see the gross supply and gross borrow way larger. It's a clear, it clearly shows people are rehypothecating their own DAI in order to optimize for this strategy.
Yeah, I mean, and what I also always watch is like their interest rates right on it, and I mean, you can always clearly see that okay, now it's slightly back down again, but there was a spike a couple of days ago when this whole Compound thing started, that people started borrowing like crazy, and DAI and interest rates shot up. And there's always also a reverse mechanism always when there's suppressed markets, right? Bitcoin is falling, Ether is falling, everybody's going to DAI and holding DAI and wants to generate yield, then of course yield goes down. Whereas if like there's a rally, then everybody, goes into the Bitcoin and Ether. And since it's so easy, right? Anybody can do it on Uniswap. You just swap it, DAI versus Ether, or wrap BTC now. And therefore
previously, as in I think yesterday even, the function which kind of decided the pro rata share of this compound token was also the APY percentage was one of the parameters. And so actually people were happy to borrow all the available supply of a currency in order to pay the protocol interest, because this kind of subsidy was very high. But this switch is interesting. It means that for every $1 million of borrow you do on the platform, you don't earn any additional compound for that borrow. It's equal across all markets. So now the optimization is to pay the least amount borrowing APY per unit of utilization. So it's just it's pretty fascinating, but it's self-governing quite quickly in order to find some stable market, free market solution to this.
Yeah, I mean, and compound obviously was like a new way of farming, right? And this just launched a couple of weeks ago. We see here 18th of June. That's when this market only opened up, right? But of course they have built an app, right? And this, I think, comes back to Christian, right? To your argument, you need a functioning app. You need a marketplace, right, where you generate money, and then you launch a compound token on top of it, and that has the big value, right? And now then maybe that gives governance or whatever, right? I mean, but some value at least. Or Bitcoin, Bitcoins give you the ability to transact, and that's, you have to pay in Bitcoin. So there is something on top of it, and I think compound again proved something. I mean, they have built an extremely well-functioning and one of the first really. And I can show it here, like it's a proper website, right? You can actually use this bloody thing. It's super easy. You just go click on DAI. You say supply, $100, or you withdraw, right? It's like click it and it's doable. And a lot of people used it, and I think that's how they did it, right? That's the story. And now, of course, the compound token on top of it is worth a lot of money. I was trading a couple $100 million for sure, and let's see how this plans out.
Just one quick, I'm going to hop off and let Christian take over. But one quite interesting thing, Christian, with regards to the regulation is there is a protocol quite like Compound called Balancer. Without going deep into it, it's kind of an index fund, quite similar in a way. What will be interesting is to see if Compound follows Balancer's plan to host this app, this UI, on interplanetary file storage, which is in essence kind of like a Pirate Bay like solution. So you now give away even the app, even the front end. So now anyone can host the front end. So even if you were regulated and put in prison, it doesn't matter, because this is on chain. Smart contracts work. The governance is now voting with tokens on chain that is distributed. It's pretty interesting.
Yeah, cool. Yeah. But we're top of the hour almost. So we've talked about a lot of DeFi. Any other questions from the group here? Otherwise, I would close. Or Christian, any more topics you want to throw in here?
No, thanks.
Cool. Then thanks very much for joining, Christian. I'll inflate the screen here, and hope to see you soon.
Yeah, thank you. Thanks for inviting me here. Thanks, everyone.
Thanks so much.
Thanks so much.